Good morning, students. I am Mrs. P. J. Sylvie, Assistant Professor, PG and Research Department of Commerce, Arulmigu Palaniyandavar Arts College for Women. In this video, you will learn what is tax, classification of taxes, meaning, advantages and disadvantages of indirect taxes. Let me see. What is tax? Tax is a compulsory payment or contribution by the people to the government for which there is no direct return to the taxpayers. Governments to carry out certain economic and social activities and to ensure social welfare. Next, we discuss about the classification of taxes. Governments levy different types of taxes. They can be classified under different categories as given in this diagram. Here, based on nature of tax, they can be classified as direct taxes and indirect taxes. Direct taxes are the taxes that are paid by a person on whom it is levied. Indirect taxes are the taxes that are paid by the final consumers. Next, based on the purpose of taxes, they can be classified as general taxes and special taxes. General taxes are the taxes that are used to finance the government budget general and without fixing for any particular type of expenditure. Specific taxes have a specific purpose. Example, education chess. Next, based on subjects of taxation. It means taxes that are classified on the basis of tax collected from whom, that is individual and legal entities, that is firm, HUF, company, etc. Next, based on federal system. It means taxes that are classified on the basis of tax collected by which government, that is central government or state government or local authorities. Next, to understand the concept of indirect taxes, it is essential to know the meanings of certain basic terms, that is impact, incidence and shifting. What is impact of a tax? It is on the person who bears the money burden in the first instance. It refers to the immediate burden of the tax and not to the ultimate burden of the tax. Next term, what is incidence of a tax? It refers to the money burden of a tax which is on the person who ultimately bears it. Last one, what is shifting of a tax? It refers to the process by which the money burden of a tax is transferred from one person to another person. Next, what is indirect taxes? Indirect taxes are the taxes in which the tax burden can be moved to others. In this case, the taxpayer is not actually the taxpayer. The impact and the incidence of indirect taxes are on different people. It is not borne by the person on whom it is levied and can be passed on to others. You can easily understand with one example. When the GST is levied on the manufacturer of sugar, he shifts the burden of tax to the consumers by raising the selling price to the extent of the amount of tax paid him. Here, the impact of GST falls on the manufacturer and the incidence is on the final consumers. Next, advantages of indirect taxes. First one, convenience. Indirect taxes are more convenient to the taxpayers since the tax is included in the selling price of the commodities. The consumer pays the tax when he purchases them. He pays the tax in small amounts and does not feel its burden. Second point, wide scope. Under indirect taxes, everybody pays according to their ability. The tax burden is not imposed on a small section of the society, but it is widely spread. Flexibility. Indirect taxes are more flexible. Whenever the government wants to raise its revenue or lower it, it can be achieved by increasing or decreasing the rate of tax on the commodities whose demands is an elastic. Tax evasion. Indirect taxes have inbuilt measures against tax evasion. Indirect taxes are included in the selling price of the commodities, so evading of such tax becomes very difficult. Substantial revenue. Indirect taxes yield substantial revenue to both central and state governments. Sixth point, indirect taxes imposing lower rates of taxes or giving exemption to the necessary articles and heavy taxes on luxurious articles. Thus, indirect taxes confirm the principles of equity. Next, effective allocation of resources. Resources allocation can be made effective by imposing heavy excise duty on lower priority goods, that is luxurious goods, and by granting relief to industries producing high priority goods. This results into mobilization of resources from one sector to another sector positively. Discourages the consumption of articles injurious to health by imposing very high rates of tax on commodities like liquor, drugs, cigarettes, etc. Next, disadvantages of indirect taxes. Indirect taxes are not directly connected to the taxpayer's ability to pay. Therefore, both the rich and poor equally pay the tax. In this case, principles of ability to pay is violated. Second, rich and poor have to pay the same rate of indirect taxes on the goods and services of common consumption. This will widen the income disparities between the rich and the poor. Third point, uncertainty. The quantity demanded will be affected by the imposition of the taxes. Thus, the revenue generated from these indirect taxes is uncertain. Fourth disadvantage, indirect taxes discourage the savings. How it discourage? These indirect taxes are included in the selling price of the commodities. Hence, the people have to spend more on the purchases of the goods. It will automatically affect the savings of the people. Indirect taxes are uneconomical as they involve high cost of collection. Sixth point, taxpayers do not feel the burden of the taxes that they pay while purchasing the goods and services. They are not aware of their contribution to the government. So, it do not create the civic consciousness in the minds of the people. Last one, indirect taxes cause an increase in the prices of goods and services. It leads to increase the prices of raw materials, finished goods and other factors of production. It creates inflationary trends in the economy. These are all the disadvantages of indirect taxes. That's all.